Hello there, I hope that you are doing well. Welcome to this new trades breakdown lecture. During this lecture I'm going to be discussing one macro for life, 9:45 am to 10:15. When it comes to the topic of this lecture, which is one macro for life, I would like to share with you that this window of time is, in my opinion, the only window of time you would ever need if you're looking at the New York morning session. If you would simply study every single week how many times there are opportunities according to the objective rules which I'm teaching to you within my mentorship, you will see, hey, every single week there's an opportunity during this window of time. That is why this lecture is called One Macro for Life. During this lecture we're going to be discussing multiple opportunities which present itself the past week during this window of time, and I'm going to be sharing with you a detailed breakdown of what it is that I'm exactly looking for during this time window. When we pay attention to the hourly time frame of Nasdaq, what I would like to see is the following. What I would like to see is that throughout my daily review of Thursday, I had outlined to you this specific hourly BC right here. The reason why I had outlined this specific hourly BC to you is due to the following. When we pay attention to the left right here, do you notice how we had this high formation take place inside of this CB and how the market displaced through this high and this CB with this BC? Therefore, this was a variation of the market structure shift pattern where we saw CB, high, BC. That means that this BC is very important to monitor moving forward. What you can see is that what I've outlined to you is for both Thursday as Friday, where the 9:45 to 10:15 macro was. Right here on Thursday and right here on Friday. Do you notice how this macro set up the low of day formations twice for these days? Do you notice that when we pay attention to the delivery as it occurred on Thursday, that the low of day actually formed below that blue shaded box of that REBC? The delivery below that REBC right here with this wick is manipulation, where price is being manipulated outside of the reference point of this range. But do you notice that the bodies keep on closing inside of that BC? That right there is something which can be anticipated as price is trading below that REBC. Why? Because there's still plenty of time as this candle is manipulating lower for it to close inside of this BC. The delivery below that REBC is what I call price distortion. And what price distortion is when IPTA is being manipulated outside of where it should form its respective lower high. Meaning, whenever you have an RE balance like this and you're anticipating a swing low formation to take place inside of it and price is trading outside of that range, submit to time, because if there is still plenty of time for that specific RE candle to close, that means that the movement outside of that range is actually manipulation. And that right there is a topic which is very advanced to understand, but once you understand this topic of manipulation taking place, sometimes outside of these arrays, you'll be able to see, hey, it doesn't matter that price traded below that RE imbalance with this wick right here, because we still have time for this candle to close inside of it. Do you see how we have a retracement lower followed by an expansion higher right here on Thursday? And do you see how on Friday we have a retracement lower followed by an expansion higher? You might be wondering, how can you call this a retracement lower? Well, when you pay attention to the delivery from this low, do you see how we expanded higher, retraced, expanded higher? And for Thursday's example, do you notice how on Wednesday we expanded higher, retraced lower, expanded higher? So whenever it comes to finding these opportunities, what we're looking for is we're looking for the underlying order flow, to be clear, in this case bullish, and we're then looking for a retracement lower into our key array at a right time, because as that retracement lower is taking place, what's happening is that manipulation is occurring, where everyone is being trapped into believing lower prices are next, so that distribution higher can unfold afterwards. When we pay attention to Thursday's delivery then, and we zoom into the 1 minute time frame, what I would like to see is that from the 9:30 open, we saw the market initially expand towards the downside. Notice that the market then repriced higher, taking out buy-side liquidity resting above the 930 high, and we then saw the market reprice lower. Notice that as it was being repriced lower, we saw multiple retracements higher. We saw a retracement higher taking place right here, and we saw a retracement higher taking place right here. The reason why these retracements higher are important is because this is the left side of the curve being established. Notice that 10 o'clock opens up, and we study the market initially expand lower heavily. Notice that this is a very quick run lower. The reason why this occurs is because sell-side liquidity has been engineered below the previous 90-minute cycle low of 830 to 10. Notice that we see Nasdaq reprice below that sell-side liquidity, and we see this CB form right here. And keep in mind, manipulation below imbalance is taking place, below the blue shaded box. We see a retracement higher taking place, and a high formation takes place inside of this CB. Notice that when this high formation takes place, we see one more push lower, and we see the market trade into this long wick. We see SMT be established between Nasdaq and ES, where ES created a lower low, whilst Nasdaq created a higher low. And this is also taking place whilst we have SMT relative to the previous 90-minute cycle low. The moment that this large up-close candle takes place right here, and we see this displacement leg higher, what we're waiting for is waiting for the market to retrace into what? Into this old CB, into this bullish fair value gap which gets created, into this high, because this is the change in the state of delivery as it's unfolding right here, where price is changing from sell program to buy program. And do you notice how big this up-close candle was, how much speed and velocity was behind it? This shows an urgency for the market to get back into the range of that RE imbalance. Notice that the market spends some time inside that newly created fair value gap, and eventually it begins to expand towards the upside. Now, what I would like to see is that when it comes to this reversal, it occurred near the end of the macro, from 9:45 AM to 10:15 AM. Do you, however, notice that the reason why this reversal occurred after we saw the market take out sell-side liquidity resting below these lows is due to the following? You need to understand that the SMT, which has taken place right here relative to a key time cycle low, is actually what is signaling to you, hey, it's now time to begin running. The market is now going to begin reversing soon. SMT stands for smart money time. And that right there is already the first sign, okay, we're likely going to form a swing point soon. The fact that we then see my market structure shift pattern being developed right here is literally confirming to you, hey, this is going to occur now. So with that being said, start paying attention to these time cycle SMTs, guys, if you haven't yet. The SMT detector is a wonderful tool for being able to recognize these SMTs in real time. In this chart, I have annotated it myself, but in real time, these SMTs are also being shown, of course. I partialed once I saw the market fail to displace above this buy-side liquidity pool, which was in close proximity to that 10 o'clock high right here. And when the market then expanded higher and reached this buy-side liquidity pool, which lined up with this CB right here, and the higher end of that RE imbalance, parsed again, and noticed that the market was failing to displace higher because ES already took out the previous 90-minute cycle high. And that right there was SMT on both sides of the marketplace. When we then go back to the RE chart and we pay attention to the delivery as it unfolded afterwards, what I would like to see is that the market was very messy, where it saw a lot of back and forth going right here. Eventually the day of Friday opens up and we see the market drop lower initially to begin the day. Notice that the market reprices back into that RE imbalance and we see the market spend some time there. Eventually, during the macro of 9:45 to 10:15, we see the market, however, begin expanding towards the upside quickly, which set up a beautiful low liquidity run higher. However, what you can see is that we already reached the RE imbalance during London right here. The reason why this is significant is due to the following. Notice that Nasdaq opened low, taking out sell-side liquidity resting below this low. And if you go into your own ES charts, which I want you to do, I want you to go to your own charts and I want you to pay attention to the REES chart of the 25th of July 2025. I want you to start paying attention to whether or not ES took out this low right here. Because what you will see is that Nasdaq took out the London low, whilst ES didn't. So think back to what I just outlined to you. Time cycle SMT relative to the session low, the previous session low, which is setting up the next expansion higher from that REBC. When we pay attention to the 1 minute time frame then, what I would like to see is that I've outlined the London high up here and the London low down here. Notice that once the London low was established, we saw the market go sideways. The market was consolidating. We see the market then open up for 9:30 AM right here. And we see the market initially have a run lower, followed by this run higher. We take out previous 30-minute cycle low and we take out previous 30-minute cycle high. So sell side has been engaged, buy side has been engaged. We then have this very sudden drop towards the downside. And we see the market reprice again below this sell side liquidity pool, which was just created. Notice that the market then eventually forms a low near the lower end of that RE imbalance. We see the market begin repricing higher. Key takeaway is this London SMT, as I just mentioned, but still go into your own charts and see whether or not you can spot it. When we zoom into the delivery as it unfolded, what I would like you to understand is the following. Notice that once this upclose candle forms right here, this upclose candle set up the final run towards the downside. The very quick repricing lower, below sell side liquidity, resting below the 930 low. This upclose candle therefore becomes your bullish breaker. Low, high, lower, low. Notice that throughout this repricing lower, we see this CB form as the market is trading below the London low. What did I teach you? Whenever you see an imbalance form through a time-based liquidity pool, that imbalance becomes very important. This imbalance right here is a real inversion for value gap. As we see the market take out sell side liquidity resting below the 930 low, SMT is being established. That SMT is paired with that London low SMT. So you have two forms of SMT right there. The moment that the market displays above the London low, it's signaling to you, hey, we're actually bullish. We're going to be repricing higher soon. Why? Because if we would be bearish, that London low would have functioned as resistance on price to continue lower. Instead, the market is getting back above it, which is signaling to you, hey, potential purge and revert. What is confirming the purge and revert to you is the fact that we see SMT relative to that London low. And therefore, the moment that the market reprices into this CB, I'm not looking at this CB as a CB to short of. Now I'm looking at that CB as a real inversion to value gap. And the moment that the market displays through that, it's again more confirmation of this being a potential low of day, so that the market can reprice higher. Notice that the market reprices into the upclose candle of that future bullish breaker. And inside of that, we see beautifully expansion higher, retracement lower, expansion higher, retracement lower, into this bullish value gap, which got created as the market left the price range of this bullish breaker. Market reprices back into that and then expands higher. Notice that the market stops right in advance of the London high and we see it retrace lower. Notice the market finds support inside of that RE imbalance, and when the next 90-minute cycle at 10 o'clock then opens up, see the market run the previous 90-minute cycle high, and due to SMT, that is a partial, we see the market retrace lower once again, and eventually the market still runs the London high beautifully, and that's again a potential partial. When the market then rejects the London high, that was to me the sign to get out, because after that there was nothing but high resistance liquidity run. What I would like you to notice is that when we pay attention to this delivery, you can see that the smart money reversal occurred in advance of the macro of 9:45 to 10:15. This right here is a variable which you need to understand, and that's the following. Whenever the SMR takes place in advance of the macro, anticipate the macro to distribute. Anticipate that we're going to see the delivery take place during the macro. That does not mean that you need to wait for the macro if you're already beginning to see the change in the state of delivery. And the reason why is because you could already be long way prior and way lower before the macro eventually takes place. And that right there is what our focus has to be on. Our focus has to be on entering as low as possible when we're bullish, or entering as high as possible when we're bearish, of course, when we're looking for a short. The way you confirm that the smart money reversal is in before the macro has to do with, look, there are these events which occur in a specific sequence. When it comes to intermarket relationship, when it comes to what sets up a reversal, when it comes to speed and velocity, you name it. Once you recognize that these events are in play, you can then anticipate that, hey, we're not going to wait for the macro before the market is going to begin delivering. No, we're going to be looking for delivery to unfold already in advance of the macro, and the macro is simply going to continue the underlying order flow. If you would have waited for the macro, you would have entered anywhere up here, which is completely fine, still a beautiful trade. However, I hope that you're beginning to realize that when it comes to this perspective, it's possible to enter way earlier already. I was very happy to see many of you take both trades of that what I've discussed during this lecture, and I hope that you have been able to understand more and more about the 945 to 1015 macro. The answer that you're looking for can be seen on the hourly chart, can be seen on the higher time frames. And once you see on the higher time frames that intermarket relationship confirming to you we're forming a swing lower, swing high, and you're seeing on the lower time frames every single part of the reversal sequence, you are never going to be looking at these markets from the same perspective again. And I absolutely love it when people say, oh, there's no algorithm and the market is random, this and that. I promise to you, if you investigate this, you're going to be mind blown by how many times this repeats itself. I want to thank you for watching this lecture all the way to the end. I hope that you found it insightful, and I hope that my mic quality was also good because I'm currently traveling. So I had mentioned prior, so it means my setup is not the usual. I want to wish you a lot of good luck in your studies, and I look forward to speaking to you soon again. Be safe.